Oh, the shark has pretty teeth, dear.
Everybody, happy Monday. How are you? How was your weekend? Nobody talks back to me, so it's a little bit weird. You're not in a room, you don't get to talk to people, but I hope you had a good weekend there. Welcome to the Closing Beat. This is a quick stock market update show that we do. We cover the stock market here, the good, the bad, and the ugly for the day. We'll go over everything as we go. We're financial advisors here at Jazz Wealth Managers. The shirt says it every day, so you know where we're coming from. I love it. I hope you keep us in mind. You go to jazzwealth.com. You can open or transfer your accounts. If you have an old Roth IRA or one that you're working on, but you're not getting any help, the company you're working for just doesn't care. They don't pull you along. They don't teach you. IRAs, long-term investments. We'll hope you keep us in mind. We also manage our own portfolios. You got them all right on our website there, almost all of them. We're working on getting the rest of them up there for you so you can kind of see what you're up against if you decide to join us, what you're in for. We're also playing a game. It's called Guess the Dow. Bottom right-hand corner of your page, you can go guess the Dow. Tell me where you think the Dow is going to close next week. If you're the closest without going over, we'll send you a $100 gift card like Mr. Art. Art was our winner last week with his guess and is the winner of our gift card. So that gift card will go out in the mail to Mr. Art. If you're one of our customers, we can credit your account as well. Does not count towards your IRA contributions for the year if you are the winner. So hope you'll play along there. We also got a class coming up this week. By popular demand, we're going to start a series on options. They won't be back-to-back series, so don't feel like you're missing out on anything. But we do weekly classes for customers. The idea is we want to teach them more and more. Here's an example of what that looks like. If you've ever been into our video library, we call it the dojo. It's going to have a lot more cool stuff on the way here, but for now you got a video library, some other goodies in there, but you can kind of scroll through, see all the classes that are just private for our customers. We do it every week. You can actually sort, for those of you that are beginners, and you go, I don't know what all this stuff means. You can sort by beginners, get yourself up to speed there, and you can move on to the geeky stuff, which we do. A lot of times the different data studies and things like that, so you can see there's a lot going on in there. That all comes for all of our customers here at Jazz Wealth, so I hope you'll check that out. Keep us in mind. We're going to cover options this week, this Thursday. Every Thursday at 8 o'clock, what you just saw comes to life. It pops up, and there's my pretty face there live inside the dojo. So we'll be covering that on Thursday, and every Thursday from here on out. We do all kinds of good classes and stuff in there, so I hope you'll check it out. So if you had to give a title for the day today, the stock market, I would call it Fear of Missing Out Monday, FOMO Monday. The stock market was higher, following through with what happened on Friday. The good jobs number came out. Everybody was like, wait a minute, no recession? Is this not going to happen? Okay, I guess I better buy the stock market. Well, today that was carryover. Think of all the people that saw what happened on Friday. They were at work, they were traveling, doing whatever. They come home and they're reading all this positive news. They're watching TV, they're seeing all this positive news, and they go, well, crap, I guess I have to buy more. Or they got excited and they're like, I want to buy more. This is good stuff. And so for that reason, you got the Dow higher by 114 points today, 11 on the S&P, that's new highs, and 46 on the NASDAQ there. The day started basically with just really nice trade talk. I mean, not just the phase one deal. I'll give you an idea what happened. They said, okay, Wilbur Ross actually said this, but they said, we're going to sign phase one of the trade deal this month. It's going to happen. They were very positive about that. They also said, you know those tariffs on auto imports from the EU? We're probably not even going to tariff those. Chances are we're just going to let that roll. We're going to move on from that. They also said that, you know how there's that, you can't work with Huawei. Some companies can't work with Huawei right now. They said, you know what, pretty soon you'll just be able to work with them. For whatever reason, we're going to drop everything that we were kind of pushing there for a while. And so all of that helped spur the initial start into the markets there. And that was pretty much it. I mean, if you look at the stock market throughout the day, it sort of petered out and then kind of got a little boost at the end of the day there. But everybody was basically just digesting that number there. And so if we look at the overall S&P 500, you find yourself at new highs here. A little overbought in the short term. We'll cover that in just a moment. If we go over to like the NASDAQ, great day today, new highs as well. That continues to push forward. The Dow working on getting above those highs. I believe it touched it at some point. Yeah, it did get up to all-time highs, didn't close at all-time highs. But the Dow recovering after a couple weeks of having some earnings there that held it back. So the Dow lagging behind, still up about 18% on the year, 22.5 on the S&P 500. And so that's what you got. Here's a little problem in the short term. Did you chase the rally today? Did you? If you chase the rally today, there are 4.5 stocks that are overbought for every one stock that's currently trading at a discount or oversold. So that lets you kind of see, okay, in the short term, we've got some stocks that are just maybe a little bit overbought. That doesn't mean they can't continue to be overbought, but in the short term, it means, all right, well, the tide is sort of against me there in terms of buying something that will likely just have a blast off kind of a move. If you look at last week, over the last 5 days, the NASDAQ's your best performer, gave a 1.54% gain over the last 5 days. The S&P 500 right at 1% last week, so a good week for that, following up on some of the stats we talked about. The Dow, 0.93%. If you look at, you could use the DIA, if you like, for an ETF to check that out. And the Russell 2000, hey, even the Russell had a good week as well. If you look at, like, let's say we use the IWM, it's moved back towards the upper end of this really boring range that it's been in. Plus or minus 10% moves here in what looks like one of those heart machines, just beep, 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 right? So we're back towards these highs. A lot of people very optimistic that this is going to get us up to new highs. In my opinion, and only my opinion, I think it takes a break before we make that next move higher. Look at all the energy that is sort of used up just to get back to highs. You got to convince people to continue to buy from there. I think that's a difficult task for the Russell 2000, but I'm not complaining, right? We've got everything sort of moving well there. Sector-wise, your better performers here. We talked about this on Friday a little bit. Healthcare, your better performer week over week. It is now very much overbought, and you kind of see that starting to pull back today. But last week it gained 3%, just a blast-off kind of move there. We've been sort of highlighting that as we've been going here. Tech stocks were your second best performer, and had a great day today as well, up another 0.5%. 2.12% the move over the last week. Also overbought. Now, sector-wise, you have the opportunity for what are some of the oversold areas. Basically, what's happened here, money has moved into more risk cyclical type plays here, like tech stocks, like healthcare and things like that. And it's sort of moved away from the defensive interest rate kind of areas there. If you look at, like the REITs. So the REITs, for example, they've been pulling back here. Last couple weeks, they've been showing real weakness here, starting to get back below the 50-day moving average. Not oversold by any means, but just starting to give back some of that real strong uptrend. I know a lot of you are looking forward to that because you want to buy the discount in this REITs area. If you like discounts, maybe not just yet, but working on those as well, would be utilities. Same thing. So utilities was your third biggest mover last week from highs to lows. Real estate was the biggest one, by the way. And so you've got these sort of discount hinting areas, right? It's like it's too early to say, oh, God, we got a little 2% pullback. Let me dive in. But you're starting to see some of these areas where money's moving out, not because anything's wrong. Like it's the profit taking. They're taking some profits out of here and they're saying, look, I'll take some of that profit. I'll go put it to work in some of these more risky areas there and see what might happen there. Oops. You have communication services moving back towards highs as well. There are a handful of sectors that are still hinting at trying to break out there. So last week, communication services at about 1.3%. And so, you got that going on, a potential for a breakout there. The basic materials, they broke out today. We've talked about this being sideways here inside of this range, not really breaking out with the market when it did. Today changes that, got up to highs, and it held basically right at highs there. So all good there. Semiconductors strong today. It's all going to be trade related. So semiconductors really building that momentum, very much overbought in the short term, but looking good there. And industrials, I'll use the XLI. I tried to get it. I hope you can see the symbol because it was cut off and people were saying, oh, it's cut off. I couldn't see it. So I tried to stretch that out. I think you can see it there. It's blurry on my screen, but hopefully you got that. That's the XLI. It's industrials. That finally, and consistently now breaking out. People would call that an official breakout there. Oil back above the 200-day moving average briefly today and then kind of faded away at the end of the day. Oil's been on this move, all trade related, started off on Friday, continuing a little bit higher today, about 0.5% on that. And for that reason, if you look at things like energy, there we go. If you look at things like energy, you're starting to find people saying, okay, that's a discount. I see that momentum building over there. Let me go put some money to work over there. So you saw that. It really depends on what you want to look at. The OIH and XOP, I mentioned this last week. Can you feel it, right? The feeling, I kept saying that. Can you feel people looking at this category here? XOP doing the same thing. You notice the volume increasing, people getting excited about that. Way too early for anybody to say buy the bottom, but today gives you a little bit more confidence there after what we were talking about last week. So just by looking at them every day. You look at stuff, you can almost feel the personality inside of what these are doing. You can just kind of get that sense of what's going on. I know it sounds weird to say that, but it's too late. I said it. So that's what you have there. Here's some stats for you real quick. Ran a scan. We said, okay, the stock market has done this year. And this, I'm just oversimplifying this. The stock market has done this. Show me any other time where the stock market has been very, very close to that performance, right? So what we did is we said, show me any other time where there's been a move that's very closely correlated to what the stock market is doing this year. Now, if you do that and you look back, there are 10 other years that are very, very closely correlated to what's happening this year. I don't know if it means anything to you, but if you look back, you go, okay, 10 other years in the entire market's history where it's performed almost identical to what's happened this year. And if you're looking for the metrics on that, what we did is we said, it has to be at least 75% correlated. So if, for example, if the stock market's been moving higher and there was a year where the stock market was moving lower, there's no correlation there. They weren't moving together, right? So we looked at that and we said, okay, out of those, only 4 of those years, 3 of those years, 2013, 1991, and 1954, finished at highs. So if you were to say, okay, show me all the years where the stock market's basically done the same thing that it's done so far this year, and then let's look even further and see which one of those finished at highs for the year, meaning the end of the year run, December 31st, we closed basically right at those highs. You find only 3 years that happened. There are 6 years where the market's peaked out right here at this very moment in time, or just before. There's 1 year that did just before, but where they peaked out from here and did not finish at highs for the year, where they started to pull back. And there's 1 year in particular, 1995, where the stock market didn't peak out until December, and then it finished close to the highs, but it was kind of hovering around the highs there. So you ask yourself, okay, what does that mean? What we're really looking for here is drops, right? If there have been other years where the stock market has performed very similar to the way it's performing now, how often did those years present us a drop between now and the end of the year? So if you look back there, the worst drop was in 1943. It was a minus 5.9% drop. That's it. That's as bad as it gets. That is the worst drop on record. From this moment in time, when the market performed in 1943, performed just like it is doing in 2019, fell 5.9%. But I should tell you, by the end of the year, it had recovered half of that. So the biggest drop was then recovered by about half. The average drop is only 1.6% in all of those years. So the 10 years that are most closely correlated to what's happened this year, average drop minus 1.6%. If you look at every single year in the S&P 500, yep, we did it. If you look every single year in the S&P 500 and you go from this moment in time to the end of the year, what is the biggest or the average drop that we typically see? Not that means we finish down at those lows, but just the biggest drop followed by whatever happens. The average drop in all of the years of the S&P is minus 4.1%. Is that too much? Hopefully I explained that correctly. What we were doing was just trying to say which year looks like this year, which year does not look like this year, and see what we can kind of decipher from that. Bottom line is not very much in the way of drops. So if you're looking for a big drop by the end of the year, your worst was minus 5.9%. The average was minus 1.6%. So there you go. I hope that was something. I just come up with stuff, and we're just doing things here. So let me know what you think on that one. All right, stocks today. McDonald's hitting new lows here in the short term, really starting to roll away there. Company announces they're getting a new CEO. The existing CEO had I think it's important, he had a consensual relationship with an employee. The problem is contract says you can't do that. He knew that, shouldn't have done that. That's unfortunate. So a lot of people going, oh no, the CEO was really good. He did a lot of great things like those ordering from the kiosks and sort of vamping all the stores, promotional things in terms of the value menus that they were working on there. So the initial response today was, oh no, what's going to happen going forward? Does this stop all the great things happening with McDonald's? But remember, McDonald's, if you've never studied McDonald's, they very rarely, if ever, I don't think have ever, gone outside of the company to find the new CEO, right? I'm sure it's happened, but most of the time they look inside the company and they find the talent there. What that tells you is you've got the same mindsets going on. Everybody's got good ideas and stuff, but by losing one CEO and putting in somebody else that was right there the whole time, it's probably not that big of a deal, right? So to me, that's kind of the way I saw it. Like that's awesome. Not to mention, you notice how when most companies lose a CEO, they say we are currently looking for the best candidate, and we will put this guy as the interim CEO in the meantime. McDonald's was like, this guy's out, bam, this guy's in. You all know him, you know what he does. They were very quick to make that decision. So in my opinion, a little bit overdone today, stock-wise. And of course, oversold here in the short term. If you've been watching this stock since September and you look at it today, you got 15% discount. So from highs down to this point here, that's 15%. If you like that big stock kind of like that, that may excite you. Other stocks in the news today, Under Armour selling off, let's call it 20%. Under Armour selling off there. They beat on earnings by 4 cents. Revenues were all right. Apparently, the SEC has been investigating them, or at least that was the rumor that was started, that they said, yes, we're cooperating. They didn't talk about what's going on. But the idea here is, hey, if we go back to 2017, remember when you guys were posting all these really interesting results from your earnings? How much of that was in the quarter, and how much of that were you pushing forward to new quarters so that make your numbers look a little bit better? That's what's up in question here, and Under Armour says we've done nothing wrong, but they're cooperating to make it happen. I'll bet you there was just something going on there where they, maybe a gray area where they were juicing the numbers. At least investors feel that way, so the stock was down about 20% today. Also, the CEO will be transitioning out, so Under Armour down by 20% today. They also said their full year earnings forecast will be at the higher end of the range. That was sort of like a Hail Mary. Throw that out there and see, well, maybe people will like that. So we'll see. That's Under Armour, and that's their report today. You got Ferrari in the news. Happens to be a stock that we own in one of our portfolios, so this is good news. The stock was higher by 5.5% on the day. They reported earnings, everything looking good for them. They beat by 4 cents. Revenues better than expected. They raised their guidance going forward. Shipments in the third quarter came in at plus 9%, so looking good for them. They also have some things, just because I happen to look at this, it's a stock we own, so I look at it a lot. They're looking at really expanding on their licensing deals, like people using the name Ferrari to both put them on clothing and things that they're working on there, as well as any kind of licensing for hotels. They're actually doing a really high-end restaurant. So things like that, they hope that eventually will account for as much as 10% of their overall revenue. So they're not just making cars anymore. They're trying to really expand and do other things. And that's always tricky, right? Because if it's a high-end luxury car that's supposed to be somewhat elusive and special, you can't go making 5 million of them, right? Because then they're no longer special. So they've always got to find that balance there between growing and showing results and everything without diluting the brand. And I think they've done a good job of doing that. All right, you got Berkshire Hathaway. We can look at the B-class shares because they're reasonable. Higher today, about 1%. They beat on earnings. Revenue was better than expected. Mr. Warren Buffett's got almost $130 billion in cash sitting there that he needs to put to work. He's just waiting for a discount, right? Bottom line, they're waiting for a discount. They got $130 billion sitting in cash. So if anybody tells you that having cash in your portfolio, now this isn't straight cash, right? These are T-bills, so he's making a little bit off of it. But if anybody tells you that you shouldn't have a little cash ready for a discount, you go, well, what about Warren Buffett? That guy's giving all the advice. Everybody else follows what he says. He's got cash. Why shouldn't I have some cash? It's not like Dad saying, yeah, but I'm different. You do this, I'm doing this. Nah, $130 billion in cash. Pretty cool. NVIDIA, was an article in Barron's this weekend. NVIDIA, there was Barron's themselves said that they're expanding their data centers over there, and that's going to be in China, and that's going to be a really good tailwind for them. So they were very positive on NVIDIA, and so price of the stock higher, 4% finished by the end of the day. It did finish near highs. That keeps plowing away, so looking good on NVIDIA there. Twilio. They just reported earnings there. Stock hit new lows today, down 5%. They said, and these were their words, not mine. They said, we may have got the math wrong on our most recent earnings release. We're going to clarify that. They actually said that they think they got the math wrong there. Okay. All right, let's move on to some other things here. 69% of the S&P 500 is above the 50-day moving average. That's exactly the same. That's where we left it off on Friday. No real change there. You had 65 new 52-week highs today. That's a record here in the short term. If we go through some of those, you can probably guess where some of these names are going to be. They're in the semiconductor space. You had AMD hit new highs there. Advanced Micro Devices up 4%. Yeah, AMD. If you look at Corvo, coming from Friday, just follow through on that great move there. The earnings, 4.4% gain on the day. You had a lot of banks in there as well. Morgan Stanley hitting new highs. I'm telling you, it's feeling a little bit extended there, a little bit overbought. Financials like Bank of America up 2% as well. Even some of the smaller banks, KeyCorp, I'm not saying that's, you know what I mean. KeyCorp breaking up above highs there. Great, solid, strong day for them. And Citigroup, also new highs as well. So a lot of banks in that space. There were no 52-week lows in the mix, so nothing to talk about there. A lot of really cyclical names hitting 52-week highs as well. Travelers was our stats play. Didn't do anything today. Actually, it's pretty quiet. Not a good sign there for Travelers. But the one that we're doing here, that we're following along with, hit its target. Did it come up? Why does it seem... Oh, you got it. Okay. Centene. So we talked about this on Friday. Centene loses 1.45%, 55.8% of the time over the next 5 days. Today was only day one, and so that one hit the line, actually a little bit better than that. And I'll point out again, do you notice what happened? Not only did it hit that area, right, but then it started to bounce off of that area. So people that were short playing that strategy, that knew the stats there, they were short and they started buying back to cover. Think about it. Why would you buy back a stock that's falling? It was doing well. Why would you buy back right there? It's because people look at the stats, and by people, I usually mean algorithms that are following along with these stats plays there. Don't think they don't exist. They do exist. I meant to type Uber. That's the next one we're going to talk about there. Down 1% on the day. Well, actually, it's they reported earnings here after hours. You got a couple things going on here. So Uber reporting earnings, they didn't make a profit, so no, you didn't miss anything. In fact, they lost over $1 billion. That means something to you. It's down about 4% after hours, down around 29.60 right in here. So not horrible, just floating back down towards those lows. Uber reports earnings basically, and they said, well, they have over $1 billion in losses for the quarter. It's going to put them over $7 billion in losses for the year. How does that make you feel if you're an investor in that company? The company is not making money and will not make money this year. They will not make money next year. If all goes according to plan, they say, we hope to make money and be profitable by 2021. So, wow. There's a company coming out on Friday, a new IPO. I don't want to pretend to know what's going on here. I just thought it was interesting. It's called Yayo. They're going public on Friday, I believe, for $3 or $4 a share. Really, really cheap kind of company. The idea here is you can go rent a car, then drive for Uber. So you could say, you know what? I feel like driving for Uber today and tomorrow. I'm going to go rent a car from Yayo, and then I'm going to turn my little Uber thing on and I guess go make my drives or whatever. And when I'm done, I'll return the rental car, and somehow I'll make a profit in between. They're going public on Friday, I believe. So a couple interesting IPOs this week. Just from a business standpoint, I thought, that seems like a headache. Wow, that's kind of an interesting business to come up with. But they're called Yayo. You got Peloton reporting their first earnings tomorrow. Here's the stock, by the way. It looks a little funky because there's not a lot of data there. Peloton reporting earnings. Remember, they're not profitable either. Right? These guys are expected to lose about 40 cents a share on $200 million in revenue. Now, those are numbers, and they're going to say, look, we're working on it. We're going to be profitable. One of the metrics that people are going to really look at here are the subscriptions to the fitness side of things. The people actually subscribing to pedal on the bikes. That's 511,000 is where they're at, so we want to see better than that. We also want to look at their churns, very like you look at Netflix. All right, you added so many customers, but how many kind of went through the system and canceled their subscription and everything? Their churn has been going up. It's approaching 1%. So anything over 0.79%, I think you see people really focus on that and kind of beat them up for that. But we'll see. We'll find out tomorrow. That's what's going on there. You also got Mylan reporting earnings tomorrow. Newmont, popular gold mining stock, and Regeneron Pharmaceuticals reporting earnings. You got 3 Fed members speaking tomorrow: Baltimore, Dallas, and Minneapolis. So they'll all be out there speaking, trying to say, we don't need to cut anymore. We're good. We don't have to cut anymore. Everybody's happy. That's the message that they're going to be trying to get out there, and I think they'll probably do a really good job of doing that. What else do we have tomorrow? Light start, econ-wise, coming out there, so we'll see what happens throughout the rest of the week. You want to explain why all of my ETFs lose money, all 8 of them? Are you in leveraged ETFs that happen to be bearish by some amount? Maybe that could be how it goes. I'm not sure. You like Uber for the long term. Well, hey, maybe by tomorrow you see a little sell-off. Maybe if you like the discount there. I know a lot of analysts are pretty positive on it. They buy into the whole idea of profitability soon. Lyft as well. There's a lot of positive analysts on Lyft. Have a lot of great reasons that they think you should buy the stock. I'm not there yet, but we'll see. Yep. You'd have to be on Yayo to come. Yeah, it was an interesting idea. God bless people for going out there and coming up with business ideas. Who knows? Maybe it's really profitable. I, generally speaking, don't like to rely or to invest in businesses that rely heavily on another one. So those guys, their existence relies on Uber and Lyft being, relevant. And I'm not saying they're not going to be relevant, but hard times for them means hard times for them. So I don't like that so much. It's kind of like investing in like Cirrus, Cruise Logic. I always say Cirrus. Most of their income comes from Apple. Not saying Apple's going anywhere, but that's a tough one. One sneeze over at Apple and all of a sudden you've got a stock that falls 20%. That bugs me a little bit with stocks like that. You always got to know where their earnings come from. Yep. Cool. Tandem, did they report earnings? Yeah, so I don't follow a lot of these. I don't like this space really. I should say this space doesn't like me, personally. Down about 10% it looks like. So trading out at 55.80, back down to this, under the little gap fill there. So yeah, just a bad earnings report. I didn't really look at that. Apparently the chairman wasn't saying the most of positive comments there. So usually they come out and they're like, oh yeah, we missed earnings, but it's okay. And they usually put a positive spin on it. Apparently we're not really seeing a lot of that from their comments so far. You'd have to listen to the conference call and things to see what happened there. I wouldn't listen to that one. That's just not up my alley there. Yep. Look up stats for those two names the next 5 days. Model some stats. Want to see your thoughts. I don't have really a way to just kind of go quickly and plug that in there. Anything that we do, usually it revolves around earnings or usually revolves around some sort of event that's driving up volatility, which catches our attention. But if you're playing with it, let me see what you got. Speaking of them, yeah, you're saying is now a good time to look at that Cirrus. I'm going to always just say Cruise from now on. I'm sorry. I know it's Cirrus. It's just a habit. Think about it, right? You got a stock that had a great move there, very extended. You got a lot of profit taking, and you're going to walk in the face of that. I have a really simple rule that I always follow, and I'm not saying you do it here, but here's the simple rule. You never buy after just 1 day's worth of a move, right? And you never sell after just 1 day's worth of a move. In other words, so you got a stock that was basically trending higher, right? Blasted off, everything's good, and then it reversed course. And you're thinking, ooh, is that time to buy? Well, it's only 1 day down. So you never buy after only 1 day of a discount like that. You want to see multiple days, and preferably you don't want to see them pull back where they erase an entire day's worth of work. You want to see things like this, right? These pullbacks are really boring, and there's really nothing going on there. That's when you want to look at those things. But never buy after 1 day of a move. Here's another great example. So the stock gaps down, you get excited thinking, hey, there's a discount. It's only 1 down day. You were teased for a few days, and then you had to sit through hell for a little bit, or you got stopped out, or whatever happens there. So careful there. You never want to be the first to buy after just 1 down day there. Hopefully that, I know it's really basic, but simple rule will keep you out of trouble there. Could you explain why different stocks' name have different amounts of characters? You mean like the same, like Under Armour? They're different classes of shares. So Under Armour, maybe is something you're talking about there. This is why there's 505 stocks in the S&P, although it's not technically true. Under Armour, you can use the symbol UAA, this is their Class A shares, or UA, which is their common stock shares. So some stocks have different classes. Some stocks actually break up their company as well, like Google. So Google has Alphabet, which they want to sort of be treated as a different company, so you could look at Google or Goog, right? So you got that in there. And it just depends on the stock. The CBS Viacom merger there, they're going to have multiple classes of stock as well. And so that's why sometimes you'll see that. Berkshire Hathaway is a great example. Same concept there. And so I think that's what you're talking about, right? Is that maybe what you're looking for? If you're talking about why do some have 3 and some have 4 and some have 5 symbols, so it used to be that if you were on a NASDAQ, you had 4 symbols, and if you were, or 4 or 5, and if you were on the New York Stock Exchange, you had 2 or 3, or 1. You could have 1 as well. But that doesn't really exist anymore. That's not true anymore. Is he off Twitter? I didn't see that. Is he really off Twitter? Come on now. So far, retail shopping expectations are through the roof in terms of what people are expecting, and that all comes from the consumer data. People are spending money like crazy. When you have the ISM numbers come out, it's all consumer driven. This entire economy at this point is all driven by you guys going out and spending money. You got credit card transactions going up. You have people spending more money on credit cards. Online spending is great, so you got a lot of that going on. Yep. Does Jazz Wealth have a REIT portfolio? We absolutely do. It is killing it. It's having a great year so far, as they all are, right? I mean, I want to sound special to you, but to be honest, all the REITs are having a great year. You can actually go right on our website, click on portfolios. They're all listed there by order of most aggressive to most conservative. REITs is just a touchdown from the top there. Yep. Yeah, Avis did very poorly on the earnings there and blamed Uber and Lyft and things like that. We talked about that on Friday. Hertz, you would expect, who's to say they're going to do any better, I did a video on them a long time ago just because I was interested in the two companies. That could be a fun one to do again. Cool. I love it, Ashish. He loves his data. Somebody's out there doing it. Beautiful. Cool. Okay. Yeah, keep me posted for sure. I love it. Someone's doing their homework. All right. Well, so I think that's good. I think I've covered everything I need to cover here today. Hopefully it helped answer some questions along the way. I know I ask a lot of you, but it takes a lot of work to put this show together. I really appreciate you guys that hit the subscribe button for us. I don't even care if you hit anything else, but by hitting the subscribe button, I'm told that does something for us. And so how about a little trade-off there? I'll keep doing the show and giving you all the goods here if you'll hit the subscribe button. And I will wish you a great rest of your day. And we'll do this all again tomorrow. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private class